Okay, second video, we're back. As you can see, this is what I thought was going to happen, and this is what happened. Bang. So we ended up making that push to the downside. We didn't sweep these lows as anticipated, but I got into a couple of trades, one winner, one loss. I'm going to go over that, and then I'm going to go over what I think is going to happen this following week. So let me hop into that for y'all. Ignore the chart. I know it's a hot mess for right now, but bear with me here. Hold on. Okay. First, I was expecting these equal highs to be taken out, but they weren't. Um, I was okay with this for a couple of reasons. I'll show you guys. When price was here, bear with me, there's so many colors. When price was here. Here, when price kind of swept these equalize and then pushed down a little bit and then went back up. I think it was on the 15-minute time frame. I think it was on the 15-minute time frame. I think it was this. Yeah, it was this right here. I don't know if you guys know this or if the people watching, you guys know this, but ICT talks about something called SMT. This was an SMT for me. So, I'll draw it out for you guys actually. Wabang. So from here to here, look at the divergence. Right, this is kind of like an up. Like if we follow the highs, like this high and that high, draw it, it kind of goes up. And this chart is GBP USD. These pairs are supposed to be correlated. Like if EU is moving up, GU is supposed to move up. However, there are times when things like this happen. EU moves up, GU moves down. Why that's significant? That shows that there's a crack in correlation, right? That means that the algorithm is moving in a different kind of way. I don't really know how to put this in the best, maybe in a way that's very articulate like ICT does, but when something like that does happen, especially in an area that we would expect to see a reversal, um, the SMT, man, again, this is really cool. I'll get to look back at this, and I'll get to, hopefully I'll have a better understanding of it so I can put into words for you guys. But just look up ICT SMT concept, and you'll know exactly what I'm talking about. I seen that in an area where I was expecting price to reverse. So as you can see, price shot down. Once price did shoot down here, the trade I got into was this one right here. I seen we had a gap here. We had a bearish order block, so I drew that out into time, and then price touched it. Let me remove the arrows here. Okay, price touched it, and as you can see, we broke structure to the downside. So price, first of all, we took out some old highs here. We took out these old highs, price broke up. I believe there's another SMT, I'm not sure. If my memory serves me correctly, I don't think so. I think it was just for the old one, the one up there, so ignore me. But price broke this low. When it did that, I drew a horizontal line here because this is the order block that broke the low. When price got here, I sold. I had my stop loss above this high. The reason why I had such a tight stop loss is because if price broke structure from this leg down here, I don't want to see price go up here again, because that would mean that this truly wasn't the high. This should be a protected high. The reason why, again, it's a protected high because price broke structure to the downside. So any move up is just something you could sell into. So I sold here or somewhere around this area. You guys seen it, and then I took profit. here. The only reason why I took profit here is because it was a 1 to 3, and I normally go for 1 to 3s on my setups. So and we also, fill the void and whatnot. But that was that trade. The next day, I took a losing trade here. The logic behind this trade, I'm kind of disappointed. I rushed into. Let me give you all the logic behind it though. I believe it was on the hourly chart. Yeah, it was on the hourly chart. This looked like a breaker to me. I don't have the full understanding of a breaker yet, but I think, if I can remember correctly, a breaker is a down move that breaks a high. So it went down, broke a high, and then I just drew that out into time. I drew. Oh, this is weird. I don't know why the box is highlighting this low, but okay, it was. And then once I seen price made these equal highs here, and then it started pushing up, I zoomed in on, I believe, a 5-minute time frame. Oh, as you guys can see, the losing trade there. Okay, price went up into that breaker, and then I got in at the break of this candle. Very, very aggressive entry. But I believe I got in at the break of this up candle here, because if price is going up, I didn't want to see this high being broken. I probably should have gotten out the trade once the high was broken, but I was greedy. As you can see, it was a 1 to 9. It was a 1 to 9 R. So I was just holding the trade. And yeah, that was a loss there. But what I've learned from that trade, wait for confirmation, at least for now. I'm not that guy yet. So I need to wait for confirmation before I get into a trade. That was the lesson I learned there. But let me zoom out here and talk about what I think is going to happen for the next week. So I had a bearish bias last week, but now I'm learning about, I think it's actually right here. I'm watching it now. Institutional sponsorship. What that is pretty much the banks protecting their positions. Like if they're buying, they want to keep people away from the level that they bought at, or something like that. At least from my understanding of it. What's weird is this. I'm looking at this now, and I'm looking at this a bit differently because of this move right here, right? Price originally swooped this low, and then it pushed up. Swooped this low, and then it pushed up crazy. So that means there's a liquidity pool here, a liquidity pool here, and from the monthly order block, price hit that, and because it touched the monthly order block, it grabbed these big pools of liquidity down here, and then look at the reaction, it shot up. Price hasn't come back here since, and judging by what I learned here, if smart money is buying down here in these liquidity pools, they don't want price to come down here because their buys are down here. They accumulated their orders down here. They don't want anyone coming down here. But now, as we can see, price did the exact same thing here. I'm thinking, look, it swept this low. It swept this low, well, the bodies of this low. And look, it pushed up crazy. So now my bias has switched to bullish. And I'm obviously going, if my bias is bullish, I'm targeting these buy stops up here, these buy stops up here. And because price is bullish, it should respect a bullish order block. As we can see, we have one here. I'm going to remove this fib. We have a bullish order block here. So now this coming week, I want to see how price responds to this. If I see price responding bullishly to this, I'm definitely going to be targeting obviously this high, and this high. So my bias for the week is bullish. because of institutional sponsorship, or this concept I learned here. Price came under this low, pushed up. We swept this low, reacting off this order block here. Plus sweeping lows, and look at this, we can't ignore that move. I don't think we can't ignore this move, at least from my understanding now. So that's me. I'm expecting something like this. Where is my pencil? And forgive me, guys, I do a lot of yapping. I'm expecting... oh, not that. I'm expecting more or less something like that kind of movement. That's what I'm expecting. So that was the trades that I took this week, the lessons that I learned, and my bias for this upcoming week. I'll catch you guys next week with some lessons, and let's see what happens with the market and where it takes us. Oh, this lighting is horrible. Wow. But y'all take care. Bye-bye.